the distribution channels have changed in insurance, and we have direct response, like a Geico. They spend $1.5 billion a year in advertising, but we can be more effective than they are because we're where the rubber meets the road. You know, if we do a good job with our prospects and so on, it's a local basis, it's relationship building. You're not going to get that from a direct response company. But that brings us to the point of where the independent agency needs to change. And I've been saying this now for many years. You almost need to drop the name agency or agent and put in their advisor. Because you've got to be all things to your clients. And you're going to build your client relationship by showing and demonstrating your level of professionalism. And that's one-on-one, face-to-face. And that's what gives the independent agent an opportunity to do well. Now, independent agents that don't get that are just, dealing with customers, which is one policy at a time, more of an immediate need situation, they're going to have a hard time lasting because, again, the distribution system is changing so much. So, just think of yourself as an independent advisor, and work through your needs analysis for your prospect, make them a client, show them your communications and how you care about the relationship. They'll be around for a long time. The customer, they may buy a car and they need insurance for whatever reason, so they go to the agent and say, hey, I need an auto policy. And they get an auto policy because that's what they asked for. They don't get anything else. They don't get any reviews. They don't get any needs analysis. They get their policy. And in many instances, they don't want to pay a lot, so they probably have lower limits than they should have to protect their assets and so on. And this is a very common thing. I know the agents listening to this can relate to it. That's a customer. We're talking about building a client relationship. First thing you need to do is determine what the exposures are. You do that through a needs analysis. Once you determine what the exposures are, then you can start to put together a game plan so that you can wrap and round the account and get everything insured properly. There's a lot of nuances to insurance. Most people, they think they have a homeowner that covers everything under the sun. Well, it doesn't. You end up having jewelry and special items that's not covered under your homeowners. Well, that's what an advisor would tell them and would provide that coverage. So that's the difference. One is comprehensive and one is just, here I am and I'm leaving. And that's essentially what it is. It's the only way, because when you look at the needs analysis, the questions that are being asked, it's causing the client to think too. Well, do I have enough coverage? Because we're talking about, we have this needs analysis and we're really just, assessing where they are, what their exposures are and to what extent they have those exposures. So the needs analysis is absolutely critical. And again, it will cause the client to think a lot more about some of their issues. Communications. They should have newsletters. They should be emailing their clients. They should have websites and mobile websites. There's a lot that can be done, but you got to touch them too. You got to have to touch your client a lot. It's as simple as a phone call, maybe quarterly, saying how you doing. Anything changed? I'm looking at the analysis or whatever. It's TLC is what it is. It's tender loving care. And that's greatly appreciated because things do change. And the client's not always thinking about, well, gee, do I have insurance for that? That's not their role. That's the advisor's role. So, doing that, you can have CSR. Best way to do is introduce CSR to the client, and the CSR can periodically pick up the phone, call the client, see what's going on, see if they can be of service or whatever. So communications, it's the whole thing.